Hello dear students, I'm back with the new chapter number 3, that is Introduction to Goods and Service Tax. Before we begin with the chapter, let's have a brief introduction about the chapter. We all are familiar with the word tax. Taxes are collected by government from two modes. First one is direct tax and second is indirect tax. Direct tax is that tax which is directly paid by an individual or an organization on their income. It is based on the ability to pay principle, which means higher income groups will pay more taxes. In the second case, every individual pays tax on the goods and services that they use, for example, for buying any food items, electronic, vehicles, etc. The amount paid by us is the sum of price of product plus tax applied on it. The same is applicable while using any services like staying in hotel or traveling by a plane. These taxes are not directly paid by the consumer to government, but are paid through the person who provides us the goods and services. Hence, it is called indirect taxes. Earlier, there were many taxes in this category like excise duty, custom duty, entertainment tax, and rates of all those taxes in different states were different. So to make the entire tax ratio equal in all the states, to make it one nation, one market, and one tax, historic step was taken, and now onwards there is only one tax in this category of indirect tax in India called GST, that is Goods and Service Tax, with effect from 1st July 2017. Now let us understand the meaning of GST. Goods and Service Tax is a tax that customers have to bear when they buy any goods or services such as food, clothes, electronics, then item of daily needs, transportation, travel, etc. Or we can say that GST is an indirect tax, that is, this tax is not directly paid by the customers to the government, but is rather levied on the manufacturer or seller of goods and the providers of services. The sellers usually add the tax expenses into their costs, and the price the customers pay is inclusive of GST. It is the biggest indirect tax reform of India. GST is a single tax on the supply of goods and services. It replaces all indirect taxes levied on goods and services by state and central government. Now let us discuss components of GST. As we know, GST is payable by the buyer, that is, the end user. An end user that consumes any goods or services will pay the GST. GST is levied on a common base by both the central and the state government simultaneously. The GST has three different components, that is CGST, SGST, and IGST. CGST refers to Central Goods and Service Tax, which will be levied by the central government. Then second one is SGST. SGST refers to State Goods and Service Tax, which will be levied by states. Or if GST is levied by Union Territory, then it is termed as UTGST, that is Union Territory Goods and Service Tax. And then the last one is IGST. IGST refers to Integrated Goods and Service Tax, which will be levied by central government on interstate supply of goods and services. So, these are the three components of which will come under GST. Under GST, Knowing place of supply is very important. It determines which category of GST is applicable. That is very, very important. Before you apply the different type of GST, you should have a clear-cut idea about the transaction. Means whether the particular transaction, that is, the movement of goods and services is happening between one state to another state or within the same state. That is very important. Based on that only, you can decide which taxes or which GST is applicable. So let me explain you along with examples. Here are the two classifications which come under GST. Generally, the CGST and SGST are applicable for intrastate, and the last one is IGST. This is applicable for interstate. So now I explain you what is intrastate and interstate. So let us see first what is intrastate. Intrastate means within the state, that is, if transaction is taking place within the state, that means both buyer and seller belong to same state, is called intrastate supply. In intrastate transactions, a seller has to collect both CGST and SGST from the buyer. The CGST gets deposited with central government and SGST gets deposited with the state government. So here, CGST and SGST both are applicable for intrastate supply. Let's understand it with an example. Let's suppose Rajesh is a dealer in Maharashtra who sold goods to Anand in Maharashtra worth rupees 10,000. The GST rate is 18%, comprising of CGST rate of 9% and SGST rate of 9%. In such case, the dealer collects rupees 1800, of which rupees 900 will go to the central government and rupees 900 will go to the Maharashtra government. In this example, you can see here both buyer and seller belong to same state, that is Maharashtra. So here entire GST will be shared by central government as well as state government equally. Here 1800 is equally divided 50-50%, that is 900 and 900. Now let us understand what is interstate supply. Interstate supply means if the transaction is taking place between two different states is called interstate supply. Here buyer and seller belong to different states. So for interstate transaction, the buyer has to pay IGST, that is Integrated Goods and Service Tax. So this particular GST is applicable for interstate transaction. Let us understand it with an example. Consider that a businessman Rajesh from Maharashtra had sold goods to Anand from Gujarat worth rupees 1 lakh. The GST rate is 18%, comprised of 18% IGST. In such case, the dealer has to charge rupees 18,000 as IGST. This IGST will go to the center. Here in this example, as you can see, buyer and seller belong to different states. Here seller is from Maharashtra and buyer is from Gujarat. So this is called interstate supply. So in this case, buyer has to pay IGST and this will go to the center, or you can say that it is collected by the central government. So that's all for today. Thank you.